So like I said, I want to talk first about building a really solid watch list. As a new or struggling trader, I think one of the best things that you can do to take a step forward in the direction of more control over the trades that you place is to start your day with a really good watch list. Because like I said, it's going to remove FOMO, which is one of the biggest things that new traders struggle with. It's going to give you more control, meaning you know which pairs you should be focused on, you should be potentially placing trades on versus the pairs that you shouldn't be placing trades on. And really more than that, a good watch list is just going to make your whole day a lot easier because you're not going to be checking 30 or even 15 or even 10 different currency pairs. If you build a really good watch list, normally, at least if you're trading the Asfx systems, normally it's not more than 5 or 6, maybe 7 pairs. And then from there, even with those 7 or 5 or whatever pairs, we want to slim that down to finding the highest probability setup. Whether that presents an entry or not is totally up to the market. We can't forecast that, but we can find where probabilities are highest and we can lock in, tunnel vision focus ourselves right there. So let's first go through how we build the whole watch list. So you see here on the right side of the screen above my head, you can see these are the Forex pairs that I'm going through every single day to look for probabilities, to look for where trend is, to look if we have the potential for an A1, a D1, or a D2. Now, for those of you that are new, I got to say first, the A1, the D1, and the D2, those are the 3 entry signals that we teach here at ASFX. Those are the 3 systems that you're going to learn when you take the courses. When you take the starter pack, you're going to learn those 3 systems, and you're going to get access to the VIP Discord chat and the VIP Facebook group. Both of those have unique aspects to them that make them powerful. The Discord for the live trading together to get feedback from me and other traders instantly, but then the Facebook group because you can network with other traders on a more slow-paced basis. You don't get lost in the chat. And also you can go back and study my daily recap videos I used to do and the markups that I post pretty often for you to keep up with the ASFX edge. So all of that is taught in the starter pack. So as we go through here, if you don't understand any of the terminology that I'm using, that's just because you're new to ASFX, you're learning. But what we look at here really is based on these 2 indicators, the EMAs, which gather information from price action, and the TDI, which gathers information from volume. And the first thing that I'm looking at to find the best, most probable setups for that day is this yellow line, this market sentiment line in the TDI. So here on CHFJPY at the top of my list, this market sentiment line today being above the 50 value tells me that it's a bullish day. The buyers are in control. The bulls are in control, if you would. However, when we look at the EMAs, we can actually see they're overall in a downtrend. The 800 EMA is above price action, which would be in a downtrend. Now, the short-term EMAs are coming up, so to me, this didn't make the watch list today because you have a disagreement between the direction that the TDI is telling you to trade and the direction that the EMAs are telling you to trade. If these EMAs had been long biased today, if the 800 was below, the 50 was above the white 200, then we would say, okay, EMAs and the TDI line up, and that's where we want to find our trade for the day potentially. But that is not the case here, so that's why this was not on my watch list. Next on the list is CAD JPY. Now, it's a very similar setup here. You can see those short-term EMAs are in an uptrend, but again, 800 EMA is above you right now. So even though the market sentiment line says to buy it, overall, you'd be buying it counter trend, the higher time frame direction. The higher time frame direction can be found without even going to the higher time frames, just using this EMA. This 800 EMA tells us that overall, the higher time frames are still short biased. So here, it's overbought today. As you can see, the RSI hit over a 70 value. Market sentiment is bullish, but the EMAs don't agree. So again, that doesn't make the list. The next pair, EuroCAD, this had an entry yesterday, a D2 entry off the top. So how that set up was with this bearish divergence. You can see from this RSI falling from Monday into Tuesday. Monday was the 19th. That set up divergence here as price was continuing to rise. We then set a lower high in yesterday at yesterday's high and continued to make lower highs off the 50 EMA throughout the day. And that's what we look for really solid D2 entries. Now, I was talking to Jen about this morning. When we see the D2, we don't necessarily want to just jump in here on the first break of the 50 EMA, that blue line. You'd like to see better structure. So when we then break under the 50, try to get back above, but make a lower high, breaking back down through the 50, that's a great place to look for the D2, using that lower high as your stop loss. It's just trading structure, trading based on the direction relative strength wants to move, which is clearly bearish based on that RSI. And that's why you see this move continue lower into the overnight. Now, this is on the list today because market sentiment is bearish again today, and we could see this hold the 50, hold the 200, continue to make lower highs, and continue to the downside. So that's why I'm watching that today. Euro JPY did not make the list today. It is a swapping market sentiment line. Now, if we blow up the TDI, it is subtle, but you see how that market sentiment line drops into the buy zone and then from the buy zone into the sell zone under the 50 value right here, and then pulls back up into the buy zone. That's what makes it a swapping market sentiment line. With that being swapping and the fact that the 800 EMA is above, it never would make my list today. Swapping liquid 50, counter trend to the EMAs, that's not going to make the list. Euro GBP is sideways today. We had an A1 entry and a D1 entry yesterday. This was one of the trades of the day yesterday. Now you can see since that move up off the 50 right here, it's used this divergence to kind of chop sideways, which we know divergence does not mean reversal. It means change. The change from the uptrend can sometimes be sideways movement. And if you look at the TDI today, it's screaming reset. As you can see, sitting very close to this 50 value with the market sentiment line. That shows indecision between the buyers and the sellers. So that's why this didn't make the list today. It's just looking choppy. It's looking very reset-like, we call it, accumulation, whatever you want to call it. But the reason why we stay away from that is because of that swapping market sentiment line. It's not in trend. There's no control with the buyers or the sellers. So I don't trade in a range and I don't trade something that's choppy. Now, Euro AUD, we were watching this, like I said, from yesterday and even from Monday. Monday is where I took the position. We're going to come back and go over this in detail in a second. But this is on my watch list today for this to continue higher because as you can see, it's used Monday's high as resistance and yesterday, Tuesday's low as support. You can see it kissed off it yesterday afternoon and last night in the Asian session. So since we're now still making higher lows there and here, and higher highs now, breaking past yesterday's high, I am still bullish on this, and that's why I'm still holding a piece of this trade, because I believe with market sentiment in the buy zone today, more than it's been in the sell zone now, this could easily continue higher. Now, it does have a very strong level of resistance in the way, and we're going to go over this in detail as we go through the whole list. I want to come back to that. Euro USD, I'm very much short biased today. Even though it's got a swapping market sentiment line, this made the watch list. As you can see, this got a flag. The market sentiment line was in the sell zone yesterday all day, most of the day, popped into the buy zone overnight, but then dropped back into the sell zone. Now, why I liked this today is because we were coming off of this initial low set at 330, right at the London Open, basically, yesterday. This was a very important level that it had a hard time breaking through. Go back to Monday's low, and you can see it really bounced off Monday's low here yesterday afternoon and again last night. So knowing that we're at a significant level that seems to be resistance for us to trade down short off of, into today's low and yesterday's low, which you would have to draw another zone here to show that, right? You're trading from this zone down into the next few zones. This zone goes back to Monday's low. This zone goes back to Tuesday's low, as you can see. But that short bias comes as we're making lower highs and as the market sentiment line is holding the sell zone more than it's in the buy zone, okay? That's what I was looking for here today. On the 1 minute, you don't get any bearish divergence that would set up the D1. You see how the RSI high here at 452 is the same as the price action high? Price action never comes higher. You would need price to come higher while the RSI falls to give you the divergence, and you just don't get that today. So I don't have an entry on this yet, but that's my bias on it, is to see it come lower. Now, Euro NZD, you can see market sentiment is in the sell zone. This has been tough this week. It's been very choppy in the Asian range while we've been trading, and then it just rips out sometimes. But yesterday, the bearish divergence set that high in, and now moving lower away from that, it's tough to say. Does it want to continue up and hold the 200 and maybe head back towards that zone, or is it a D2 continuing lower down towards the 800? Very tough to say, and that's why I did not make my list today. Couldn't get a solid read on it. GBP CHF, remember we were short this on Monday. James made some money on this. Yesterday, had a potential for this to come lower, but there was too much bullish divergence on the bottom. You see with the RSI rising, I'll draw it so you can see it, because I know some of you guys don't see it like I do. Here, see that? You got that, right? You got enough divergence there telling you, okay, this might be ready to not move lower, to either chop sideways or come higher. And now today, market sentiment line is swapping, so there's nothing for us to do with this today. It looks like it's chopping and reset, which makes sense. So you let it do its thing. You come back to it later today or more likely tomorrow. GBP USD was the trade of the day yesterday. This D1 and A1 here off the 1.3668 level, coming down, touching ADR, now bouncing back up and really just kind of chopping sideways overnight. Again, swapping market sentiment here, how it goes sell zone into buy zone into sell zone, that yellow line, that's a turnoff to me. So with it being overall short bias still, it makes sense to look for shorts, but just knowing that it is a swapping market sentiment line, that's going to decrease the probability of those trades. Now, GJ is interesting. GJ is on the list today because I'm interested to see what it does. Look at the divergence from Monday off the bottom. Look at this inverted head and shoulders, your left shoulder, your head, and your right shoulder. I do believe that this can continue to hold the buy zone here. See how market sentiment's basically in the buy zone all day today? I think that will hold the buy zone, and this can continue higher, holding the 50 EMA, probably headed back up towards this 800, towards the ADR level here, just based on this inverted head and shoulders. So that's what I'm watching for GBP JPY. Nothing on GBP AUD today. As you can see, market sentiment was very swapping, sell zone into buy zone. Just didn't like it. I like perfect market sentiment lines, so that's why this did not make the list. GCAD was something we were watching this morning for the potential to see it come lower, but notice the bullish divergence sets that support zone in at the bottom. I drew the support zone with the pin right here, just because the two candles to the left and the two candles to the right are not lower. So I saw this as the zone. Notice we hit the zone once this morning and bounced off of it. I know there was the opportunity to take it short here on the 1 minute, but just notice it shoves lower with an overextended candle with the biggest body of the day, and now it's completely returned. What this does to me is this drives home the point that you should really wait for horizontal zones to be broken before you look to come in and take a trade. So yes, if you look at the 1 minute, you do get divergence, but it does not get to the 1 minute 800 EMA. So if I sync this up, you'll see the divergence does not make it to the 1 minute 800 EMA. That's something that we normally like to see for really good D1 entries. On top of that, you do get the 50 EMA entry where it breaks the 50, comes back under with market sentiment in the sell zone, and it falls just about 2R. But notice, look, it turns right around very quickly. So if you did take the trade, you know your stop would be locked. You shouldn't have lost money on this if you did take it short. And when the market sentiment line comes back into the buy zone, that's the signal that the trade is done and it's time to get out, especially because you were trading into a zone that you know it could bounce off of. So when you're trading into a significant zone like this on the 15 minute and you're trading into bullish divergence, if you're going short, don't marry the trade. Move the stop, take profit at R multiples, and if it does turn around, get stopped in profit and move on to the next trade. I saw we had some questions. Luca asked some questions about this. That's how I would have traded GCAD today. It doesn't touch the 1 minute 800, so I don't love that. I would rather see the body come to the 1 minute 800. We like that for our entry, but it does give you that safety entry that we talked about in the D1 deep dive. Just make sure you're locking your stop loss here and you're not marrying this move to the downside because that could cause you to take a small loss. So make sure you're locking your stop. It moves almost 2R. There's no reason to go red on this. Because if you look at it, the 15 minute, it's not a perfect 15 minute setup. You're trading into a horizontal zone. You're trading into bullish divergence. Okay? I hope that makes sense. Now let's look at GBP NZD. 15 minute, you can see just choppy today. Market sentiment's in the sell zone. It did move down, but it's very choppy. Market sentiment then ends up coming into reset here as the morning has gone on. So nothing yet. Hasn't presented anything. It's not come off the 21 EMA. There's just nothing to do with it right now. USD CHF has a great market sentiment line today. It could most likely finish the day higher. However, USD CHF for me is known to present fake out entries very often. So just be wary if you're trading USD CHF. It's not one of my favorite pairs. And USD JPY market sentiment is bullish, but the EMAs are not that great. You're using the 800 here maybe as support, but I've seen it also hit this 800 and come back down through it. So I'm not a big fan of the USD pairs, just being honest. They don't move typically as clean as some of the Euro or GBP pairs. And I think that's because they're impacted by US dollar news very easily. Fundamentally, they're driven. Now, that's how we build the whole watch list this morning, and that's why I think it's important for you guys to understand how to build a really solid watch list, because now you can see, and instead of focusing on all 17 pairs, I'm only focused on 4, and I might not even find an entry today. You know what I mean? You don't need to rush your trading. Look at my trading last week. I traded on Monday. I was in and out on Monday. Then I traded on Wednesday. I was in Wednesday, out on Thursday. Now this week, I'm in on Monday, and I'm still in the trade on Wednesday. So you don't know when the market is going to end your trade. You don't know when the market's going to turn around. It's just our job to show up and take the best entry signals possible. So if it hasn't presented something for you and you can't find a high probability entry, don't go taking the next best idea. That is what ruins new and struggling traders. They think that, oh, there's nothing perfect. What's the closest thing to perfect? Well, if there's nothing high probability, why put the money to work at all? You're more likely going to lose it then because your probabilities are decreased. So it's better to sit on your hands and wait. We'll end this clip here with that Jesse Livermore quote. The money in trading is made in waiting. Never forget that. Okay? Any questions about building the watch list? Put them in the comments below. So Lucas said, is it better to stay out of UCHF even if a signal presents? No, you can take it if a signal presents. It's just not my favorite pair. I would never trade it with full A setup size where I would give Euro CAD an A setup. Does that make sense? Morning, Gerber. Good to see you, bro. All right, so I think now we can go over this Euro AUD trade. It seems like everybody's good on the watch list. Tika, good morning. Seems like everybody understands how I built the watch list this morning. We're going to watch Euro USD to see if this will come lower. And we're going to watch Euro AUD. Do you ever draw zones on the daily or the 4 hour? No, not very often at all.